Devash, welcome to the show. Let's start off with this one because we've seen a lot of traction in the electronic manufacturing services sector in general. Your view on Dixon Technologies going ahead?
So we are positive on electronics manufacturing and services space, especially players like Dixon and others, Ember, Syrma SGS. See, the industry is driven. India wants to be a global destination for this, and government initiatives are also there in helping this industry to propel the growth. And this is underpinned by several factors. First is there is a large captive demand for these products into India. The proliferation of electronics on everyday life we are seeing, and as Internet of Things will come, this only intensify. And there is import substitution where government is giving a lot of subsidies. We are also rising in exports. So there are concentrated efforts to make EMS value chain very efficient into India and increase the value addition portion. So we are bullish on the industry in the sector. We had come out with the coverage on many of these stocks earlier this year. In fact, some of these stocks like Dixon have actually doubled in last 1 year. So I may not put a new money at this moment. If there is were to some correction about 10 to 15%, at lower level, they will become quite attractive. So we are positive for a longer term, but we'll wait for a better entry points.
We looked at Aditya Birla Group's stake that has put in the capital of 2,075 crore. Their stake might just not change, and it's going to remain somewhere near 10% itself because of this infusion.
Right. Smriti, thank you so much for getting us those updates on Vodafone. Remember that the entire sector is a very capex heavy sector. And at the moment, we are looking at a lot of incumbents undergoing that capex cycle as well going forward. Devash, your view on the entire sector going ahead, what's the way forward here?
So it is a quite attractive sector at this moment. Earlier we had more than 10 players. Now we have reduced to 2 large players and 1 player which was struggling, and there were questions about whether this player will be able to survive or not. Now with the promoter infusing about 2,000 crore and then this FPO where they'll raise about 18,000 crore, the probability of company surviving goes much more now. There will not be any issue about the funding, because mind you, they'll also have to tie up about another 45,000 crore of debt in order to pay the bills. They have about $4 billion of payment due in 2026, and all this equity and debt arrangement are crucial for company to survive in the long run. So I think this is an important step for the survival of this company. I think this will increase the certainty about the various players in the industry, and eventually the opportunity which is there, as I said, going into 5G, using telecom towers for Internet of Things, those things this company will have a say in the industry. So longer term, it is positive for the industry and the company.
Devash, 2023 calendar year was super strong for the entire real estate sector. Now, over the last 2 or 3 odd months, we've seen a little bit of consolidation set in. Of course, this is because perhaps largely maybe that the valuations are now trying to factor in, well, you know, what the future lies ahead. What's your stance on this sector?
So we continue to remain positive on the sector. So as you said, the luxury end of the market have been stagnant a little bit, but I think the way disposable incomes are rising, the wealth effect is going to kick in more, and that will continue to impact the help the luxury market as well. The affordable housing and the commercial and residential real estate market are also in the upswing, and that cycle is just 1 or 2 years into the cycle. So these cycles are usually much longer than that. So real estate and ancillary to real estate like cement and other metals are continue to do well. So if you are a long-term investor, just because the prices have gone up, I will not book out. I will continue to hold shares in this space. I think there is much more room to go.
Devash, we've been talking about the EV play for the last 12 to 18 months now, where in fact we've seen acceleration. Among these themes, any ideas that stand out for you?
Right. So auto ancillary is at a cusp of a big opportunity. So we know that India is the 4th largest global automotive market. We have about $250 billion market for India. And apart from that, these auto ancillary companies have an opportunity to become a large player into the value chain of these global OEMs. According to industry reports, there is a room that in next year, 10 years, this space can be as big as $1 trillion of exports. So if Indian companies can become part of the global supply chain, if they come up with the investments in their manufacturing capabilities and become a part of a global value chain in technology and innovation, then they can become a really big player. We already have seen that the companies like Hyundai and Kia, ZF, Kubota, they have already announced their plans to make India as an export hub for their global R&Ds. So that is the space we are looking at, and that's why we are extremely positive on the longer run for these companies. We have some certain companies like Automotive, 𝐓𝐞𝐥𝐞𝐜𝐴, Motherson, Sumi, Suprajit, ZF steering under our coverage, and where we are longer term bullish on them.
Devash, any view on the diagnostic sector as a whole in general?
Right. So last year, new players did come into the industry and the competitive intensity of the industry went up. And now it has been easing for past 6 to 12 months, especially when new players have now started prioritizing on the unit economics and their profitability, and they are reducing that deep discounting strategies which they employed in order to gain the market share. So that is overall positive for the company. Metropolis in their healthcare update, Q4 update, they have said that despite the prolonged holiday period, they have been able to register about 10% YY increase, which is a very encouraging sign. This industry is going to consolidate, and from unorganized players and many large organized players will appear, and this company has done quite well. B2C revenue growth of 18% and core business growth of 15% augurs well for the longer term in this industry and the player.
Okay, there you have it again. Another industry with positive prospects going in. Well, on that note, we should thank Devash for joining us and taking us through his views